All right. Hi everyone. All right. Welcome to today's live trading session brought to you by IronFX. Okay. As we wind up this week, right? It's been quite an eventful trading week as well, right? Especially after last week's after last week's U.S. presidential elections as well as the FOMC meeting. Right. Before we start today's webinar, right? Please take note of the disclaimer as well and the risk warning. Right. This information is not considered as investment advice or an investment recommendation, but instead a marketing communication. And so take note of the risk warning, right? That the products here are traded on margin and carry a high level of risk, and it is possible to lose all your capital. Right, and before we start today's webinar as well, right, if you have any requests for any analysis on any of the instruments, do drop them in the chat box early, right? Do not wait till the end of the webinar, right? Because then we just, of course, simply won't have sufficient time. Do drop your request in early on so we have time to go through the analysis properly, and we don't have to rush through anything. Right. My name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, before we dive into the charts and trading view, let's take a look at what's left on the economic calendar. There's quite a few things going on. Right, today we've got US PPI and unemployment claims coming up later. And we've also got US retail sales on Friday, 15th of November. Right, this is what's left of the calendar for this week. Right, apart from PPI data and unemployment claims today, we also had employment change data on the labor force report out of Australia earlier this morning. We're also going to have three major central bank chiefs speaking as well at their respective events. Right, we have ECB President Christine Lagarde, Fed Chairman Jerome Powell, and BOE Governor Andrew Bailey, all delivering their speeches at their respective events. And tomorrow as well, we've got industrial production data and retail sales out of China. We have GDP data out of the UK, and of course, we have retail sales as well. Right, taking a slightly look at PPI, right, we saw yesterday, right, Wednesday, 13th of November, we had US consumer price data released. And although all the results, if you look at it, for headline CPI and core CPI on a monthly and annualized basis, all came in line with their respective forecasts. But we did see headline CPI accelerate from 2.4% to 2.6% year over year, while the core CPI remained unchanged at 3.3%. Right, despite the results coming in line with the forecast, this acceleration in headline CPI on annualized basis triggered a pretty strong demand for the US dollar. And we have seen the US dollar surge as recently as last week, right, following the outcome of the US presidential elections. But we've also seen a very strong rise or appreciation in the dollar since the end of September as well, right? So should we see PPI data later today accelerate once more, this is likely to function as an additional bullish catalyst for the dollar. Now, if we look at the charts here, on the left, I have the chart for headline PPI, and on the left is the chart for the core PPI, both on an annualized basis. And when we look at headline PPI, we can see that it's moderated significantly lower over the past 4 months, right? It hit a high of about 2.7, 2.8% in June, and it's eased down to 1.8% in September. However, when you look at the core PPI, it's actually showing acceleration. It has accelerated for the last 2 months, rising from about 2.5% in July, coming up to about 2.8% in September. And worryingly, the forecast, right? We have the monthly forecast for core PPI and headline PPI. Both are showing a higher figure than the previous month's gains, right? In the previous month, which was basically September, right, core PPI rose just 0.2%, while headline PPI was flat. Now, for October, we're expecting the core PPI to increase by a much larger figure, and that's at 0.3%. And we're also expecting headline PPI to increase as well by 0.2%. This is naturally going to have an impact on the annualized readings, and we can probably expect to see acceleration in headline PPI and in the core reading as well. So should we see another hot PPI print, this is likely to function as an additional bullish catalyst for the US dollar. Right, now let's take a look at unemployment claims. This is also going to be released at the same time as PPI, and that's at 1:30 p.m. GMT. Right, we can see that the 4-week average for claims stands at 227,000. Right, so initial jobless claims or unemployment claims is a weekly metric that tracks the number of Americans are filing for unemployment benefits. So if you see a number that's trending higher, that means more Americans are filing for such benefits, and it usually uh, signals that the US labor market is weakening. Conversely, when you see claims start to trend lower, right, if claims moderate lower, it means there are less Americans filing for such benefits, and it signals a more resilient labor market, right? So we can see after this spike in early October, right? This spike was primarily due to a combination of the Boeing strikes and also the impact of hurricane-related disasters in the cities and states near the Gulf of Mexico in America. But since then, we have seen claims moderate significantly lower. And the last couple of claims, last 2 weeks, right, over the last 2 weeks, we have seen claims come in underneath its 4-week average of 237,000. Right, and for this week's forecast, we are expecting to see claims remain relatively unchanged at 224,000. So last week, we saw claims coming in at 221,000. This week's forecast is about 224, still underneath the 4-week average and uh, relatively unchanged from last week's reading. Now, how can we interpret this data? Right, very simply, if we get a result that's higher than the forecast of 224,000, right, this is typically going to be bearish for the US dollar, right? This would typically function as a bearish catalyst for the US dollar. And if that were to happen, then of course the euro currency pairs like the euro, pound, Aussie, Kiwi, and gold prices too are likely to rise. Conversely, if claims come in less than 224,000, that means there are less Americans filing for such unemployment benefits. So that signals a much more resilient labor market. And that in turn is going to be typically bullish for the US dollar. So naturally, we would then expect currency pairs like the euro, pound, Aussie, Kiwi, and gold prices to fall. Right, so take note, the 4-week average currently stands at 227,000. The forecast for this week is at 224,000. And last week's reading came in at 221,000. Right, so if we do see a figure that's continuing to edge lower, right, that could be a potential bullish catalyst for the US dollar. So we may have a double bullish catalyst, right? If we see, for example, a hot PPI print and we see claims coming in lower than the forecast, right? Both of these results would then potentially function as a double bullish catalyst for the US dollar. So take note of that. Right, and coming up tomorrow, we have US retail sales as well. Right, this is also released at 1:30 p.m. GMT, and we can see on a monthly basis, consumer spending has been relatively strong over the last 3 months. Right, in July we had a strong gain of 1.4% month over month. August saw a slightly slower rate of sales, about 0.1%, but we saw a nice increase in September with sales growing 0.4%. And for October, we are seeing the estimate point to a 0.3% increase. So should we see sales continue to come in strong, this is also likely to function as a pretty strong bullish catalyst for the US dollar, right? So take note, we're ending the end of the year, we're approaching the end of the year. So that means we also have Black Friday sales, Sunday, Cyber Monday sales coming up, as well as the Christmas shopping season all kicking off very soon. So we can probably expect consumer spending to remain relatively strong as we wrap up 2024. Right, with that, now let's dive into the charts and trading view and begin the analysis on the dollar index. And of course, right, as I mentioned, yeah, do not wait till the end to drop your requests. Please drop your request in early so we have time to go through the analysis together. Right, so as I mentioned, right, this was the election day, 6th of November, the outcome of the US presidential elections. We saw demand for the dollar surge, but even before that, we've seen the dollar surge since the end of September. Right, we have seen the dollar index gain from trough to peak, which is today, right, gaining nearly 6.7%, or about 665 pips in the process, so a very huge move in the dollar index over the last 6 weeks or so, right? Despite the Federal Reserve making a jumbo interest rate cut of 50 basis point on Wednesday, 18th of September, we've actually seen the dollar stabilize and reverse to climb higher. Now, part of this reason for the dollar's rebound is okay, before that, right? Before that, when we look at June or July till end of September, right, we actually saw inflation data, both CPI and PPI moderating lower. We also saw a significant slowdown in job growth as highlighted by the ADP employment report as well as the BLS non-farm payrolls as well. So both labor market was slowing down while inflation was trending lower, all which caused the dollar to sell off quite sharply, right? So the markets were already pricing in the first major rate cut by the Federal Reserve well before the actual rate cut took place. So remember, markets are always forward-looking. So as inflation data was trending lower significantly, while jobs growth was slowing down, all this functioned as a bearish catalyst for the dollar, and the dollar was selling off well before the actual rate cut took place. Now, what happened in October, right, is very interesting as well, because in the first week of October, we had jobs data once more. And on Wednesday, 2nd of October, the ADP released its employment report, which showed a strong rebound in job gains. And then on Friday, 4th of October, that's when the BLS released its non-farm payrolls report, which also showed a strong rebound in job growth as well. So we had two strong fundamental catalysts with regards to the labor market that pushed the dollar higher. And then in the second week of October, I believe it was Wednesday, 9th of October, and Thursday, 10th of October, we had CPI data and PPI data, both of which showed the core readings accelerating, and that also functioned as additional bullish catalysts for the dollar, and we can see it rise up very strongly throughout October, right? And of course, following the outcome of the US presidential elections, right, the dollar was seen to rise very strongly once more as part of the Trump trades, right? We can see the dollar rising very sharply since the outcome of the elections as well, right? So with that, we can see how the fundamental data can really function as major catalysts for the dollar index, either to the downside and to the upside. So you cannot ignore how the data is actually uh, supporting the market or supporting the dollar index in a particular direction. All right. Okay, so with that, now let's begin the analysis and identify the key support and resistance levels for the dollar index starting on the daily time frame. Right, so we can see here, previously there was a swing high resistance that was identified at 106.02, right? This was a significant swing high resistance that was formed at the end of June, right? Very significant level here. And it did stall. We did see the dollar index stall on Tuesday, 12th of November. It did make an attempt to break above the swing high resistance on Tuesday, but it briefly rose above it before settling underneath. But yesterday, we saw a very sharp breakout, primarily led by the the CPI data, right? We had headline CPI accelerating from 2.4% to 2.6% on an annualized basis, and that caused the dollar bulls to come into force once more. And that bullish momentum has continued very strongly today as well. And of course, should we see uh, PPI data show come in hot while we see unemployment claims trend lower. Both of these could then function as additional bullish catalysts, and we are likely to see the dollar index climb even further. So take note, it's already broken past what was previously identified the first resistance at 106.08. It's also breaking above, or it has broken above the second resistance, this level here at 106.77 had been previously identified as the second resistance. So we can see in a matter of days, the dollar index has broken through two significant resistance barriers at 106.08, and then at the second, and today at 106.51. Now, what were previous resistance barriers can now potentially function as resistance as well, right? So this resistance at 106.51 can now potentially function as the first support. This is a nice pullback support level at 106.78. And the previous swing high resistance that was formed at the end of June can also now function as a potential support level, and that's going to be at 106.08. So we have two pullback support levels respectively. And for the resistance, right, we're going to have to zoom out a little bit more. And we can see there's a nice double top here that occurred in 2023 at the end of October and at the beginning of November, right? We can identify this level as the first resistance, and we can see that this is a nice double top, right? The first top taking place on the 3rd of October, and the second top taking place on the 1st of November, right? A very significant multi-swing high resistance, and this is where the dollar index is running towards as we currently speak, right? So if you have been long on the dollar index, right? If you have been long on the dollar index, identifying your first take profit target at the first resistance, which is at 107.05, is a suitable area to do so, right? So you can see this very clearly. This is a multi-swing high resistance, and this is a good area to identify your first take profit target for any long dollar index positions that you may have. Now, should we see the dollar index break even higher, right, beyond this first resistance, how could we possibly identify the next resistance barrier? Let's zoom out a little bit, and we can see, right, there's another pretty decent swing that has taken place here on November 2022, right? You can see this level sits at 107.83, and we can identify this as the second resistance here. Right, so you can see how we are using past resistance areas or past swing highs to help us identify potential resistance barriers for the present, and how these present resistance barriers can in turn then be used as potential take profit targets for the long trades. Now, on this nice downtrend, right, we can also run a Fibonacci retracement starting from this swing high on the 28th of June going down to this swing low on the 27th of September. We're going to be looking for key extension levels, and they sit at 127 and 161%. Now we can see very clearly the 127% extension level aligning very well with the second resistance, so we can keep that on. And at the present moment, 161% is not valid, so we're going to get rid of this retracement and this extension level for now. Right, there may also be a projection level that we can use. Let's try it out. And a projection involves 3 points, and we'll be starting with the first point here on 27th of September, going up to point 2, 29th of October, and ending at point 3, which is the 5th of November. So let's look at all the key projection levels. And we can see that the 100% projection level aligns very well with the second resistance, which also aligns very well with the extension at 127%. So this forms a Fibonacci confluence. When you have more than one Fibonacci level at a particular price zone, we identify this as a Fibonacci confluence, and confluence areas usually tend to function as very strong resistance zones. In this case, it's going to function as the resistance zone. And for the supports, if we identify a Fibonacci confluence at a support zone, then typically that can function as a very strong support area as well. But for now, the second resistance looks to be a pretty strong barrier, which is a swing high resistance that's accompanied by Fibonacci confluence at the 100% projection and the 127% extension levels. And we can also see the 78.6% projection sitting pretty close to the first resistance, so we're going to keep that on. And of course, 61.8% has already been surpassed, so we're going to get rid of that projection. It's no longer valid. Right, you can also see how we've included Fibonacci projections into the analysis along with the Fibonacci extensions. All right, so these are the key levels here for the dollar index. Right, take note, second resistance is a swing high that has taken place in November of 2022, and it is a level that's accompanied by not one but two Fibonacci levels, basically the 100% projection and the 127% extension. And then the first resistance is also a multi-swing high resistance, accompanied by Fibonacci projection at 78.6%. And also take note how today's data could likely function as strong bullish catalyst for the dollar, and what we can expect this index to do. All right. Okay, so if the dollar index is rising sharply, then of course currency pairs like the euro, the pound, Aussie, and Kiwi are all falling, right? While dollar yen, dollar CAD, and dollar franc are naturally rising as well. So now let's take a look at the euro. We'll take a look at the euro and then dollar yen, and then we'll move on over to the commodities. Right, with the dollar index rising nearly 6.5% since the end of September, we have also seen, right, from peak to trough, the euro dropping almost 6.2% as well, losing about nearly 690 pips along the way. You can also see a very huge downward move for the euro. Right, it has already broken past a previously defined resistance level. This was previously a significant swing low support level, right? This was a significant swing low that took place in mid-April 2024, and that got taken out quite easily yesterday, which was Wednesday, 13th of November. Right, so we saw a bearish breakout takes place below this swing low, and we are seeing the euro drive towards another significant swing low support area. This swing low took place in October of 2023, and that sits around 1.0463. right? So what was previously a strong support area, right, can be used in the identification of a resistance barrier, right? So we can identify this level as a resistance as well in the current scheme of things, and I can also identify a support level here, right? There's a pretty decent support level here. There's a mini swing that took place on 16th of October. We can identify this as the first support, and we can identify this major swing that took place on the 3rd of October as the second support for the euro. Right, so what these support levels also tell us is, right, with the euro falling very sharply, we can identify the first support, which is at 1.0506 as a potential take profit target, right? This can be identified as the first potential take profit target. And of course, if the euro continues to drop even lower, right, we can then identify the second support at 1.0466 as the next potential take profit target, right? So take note of that. Right, in terms of resistance, yep, I think this is pretty fine. I think we'll identify this level at 1.0680. That's the first resistance level. It's a pullback resistance. And then I see another pullback resistance at 1.0655. We can identify this as the second resistance here. Right, okay. On this major uptrend, perhaps there's a Fibonacci retracement that we can draw. The purpose of this retracement would be to find an extension level. Right, so let's see, let's pull up all the extension levels. Remember, key extension levels sit at 127 and 161%. And in this case, we can see there's a 127% extension level sitting pretty close to this mini swing that has taken place in October of 2023. So let's just highlight this as a support zone here and take note of that. So we can see that this first support is also accompanied by Fibonacci extension at 127%. And this is where it will be a good idea to identify your first take profit target for any short euro trade that you may have, right? So this would be at around 1.0520, right? Identifying a take profit target around there, which is not too far from where price is currently trading, right? If you've been shorting the euro since the beginning of the week, or perhaps since yesterday or since this morning, right? Identifying your first take profit target at 1.0520 would be a suitable area to do so, right? We don't need 161% in the at the present moment. Maybe that's a level that's going to be relevant in the future, but for now we don't need it. So let's just remove it from the analysis and just keep the 127% extension level here. All right, so these are the key levels for the euro, right? And it's dropping sharply as well. And of course, if we see the dollar continue to climb even higher, especially if it's fueled by PPI and claims data, then of course, naturally, we're going to see the euro drop even lower as well. Now, conversely, dollar yen should be expected to be rising, right? Which is what we're currently seeing as well. From trough to peak, we've seen the dollar yen gain almost 12%. This is a huge move in the dollar yen, where it has gained around 160 pips. If I wait, is it 160 pips or oh sorry, no. It's about 1,600 pips. It has gained about 1,650 pips in a matter of about 6 weeks as well. So it's a huge 12% move for this currency pair. Right, and once again, this is all being fueled by the stronger employment data in October's acceleration in core CPI and PPI in October as well. And also, of course, the outcome of the US presidential elections all functioning as strong bullish catalysts for this currency pair. Now, on this nice downtrend, there is a nice downtrend that begins from 3rd of July till this swing low on the 16th of September. We can also draw a nice Fibonacci retracement. But before we draw the retracement, I can spot a pretty decent resistance level here. Right, there's a pretty decent resistance level at 158.28. This was previously a nice swing high resistance that had taken place in 26th of April, and this can now potentially function as almost like a pullback resistance level. And slightly below, I see a pretty decent pullback resistance. This was in mid-July, functioning as a pretty decent support level, which was at 156.16. And it does look like the dollar yen is going to make a serious attempt to break above this level here. So we have the first resistance for dollar yen at 156.16. This is a pullback resistance level. And we have the second resistance for dollar yen. That's at 158.28. This is also another pullback resistance level here. Now, we can also run a Fibonacci retracement from this swing high on the 3rd of July, going down to the swing low on the 16th. Let's look at the 61 and 78.6% retracement levels. And we can see 61.8% has already been surpassed, right? We can see very clearly 61.8% was surpassed quite strongly last week. But we can also see at the same time how the 61.8% retracement level function as a strong resistance barrier at the end of October, right? We can see there was a resistance, strong resistance here, and there was also pretty decent consolidation in price here in end of July, and this consolidation here, this support zone here in May proceeded to function as a pretty decent resistance barrier that was accompanied by a 61.8% retracement. So we did see the dollar yen stall around 153.40 or 153.50, roughly around there, pulling back, breaking higher, pulling back again before finally making a very clean break above this resistance barrier here. Right. So as I mentioned, of course, with dollar yen cleanly breaking above the 61.8%, we don't need that anymore. We'll just keep the 78.6%. But we can see that the 78.6% is somewhat in no man's land, right? But maybe just keep it on here to get a good idea to see whether do we see any reaction around this level here, right? The first reaction that I'm expecting is going to be around the first resistance at 156.16. But of course, if we see a set of data that's going to function as strong bullish catalyst for the dollar, then definitely we can expect dollar yen to make a bullish break above this level here. And should that bullish break take place, we can then use the 78.6% Fibonacci projection as the first take profit target, and then we can use the second resistance at 158.28 as the next potential take profit target. And of course, if dollar yen continues to climb even higher, the next resistance is simply going to be this major swing high that has taken place at the beginning of July, which is at 161.74, right? This is the high of the year, right? This is the high of the year 2024, right? It's not the all-time high. So if you look at the chart for the dollar yen on the monthly time frame, right? This is not the all-time high, I believe, right? Yeah, we can still see over the years, the yen has depreciated significantly. Sorry, the yen has actually gained significantly back from the late 80s, right? Mid 80s has gained significantly, causing dollar yen to drop. So take note, although dollar yen is trading at elevated levels, right? It is nowhere near at the levels that we saw back in the 70s and 80s as well. That's when the yen was truly very weak, or rather, the dollar was extremely strong back then. But yeah, well, nevertheless, we are seeing a very strong move for the dollar yen in the current market environment. Now, what about support, right? This was a pretty decent resistance level here at 154.58 that occurred on 6th of November. And when you look back, it originally functioned as a pretty good support area level or support level on 16th of May and the 5th of June. So this creates a nice overlap level, which we can use in the identification of the first support. So the first support at 154.68 is a nice overlap level. And the second support for dollar yen can be identified over here. And it's a nice pullback taking place here, a very strong pullback taking place here on 5th of November, and a small pullback taking place here on the 24th of October. This is at 151.54, and we can identify this level as the second support. Right. Okay, let's see. Can we use a projection? Perhaps we can. All right, let me see if we can use a projection. There's a slightly larger projection that we can use from here, 30th of September, going up to 28th of October, going down to 6th of November. Let's look at all the key projection levels. Right, we can see 61.8 sitting pretty close to the second resistance, whereas 78.6800 are sort of pretty far from where this major swing has been identified. So let's just keep 61.8% for now. And we can identify this level as a resistance barrier here. And there may be one more projection that I would like to try out. This is a much smaller projection that begins from here, 6th of November, going up to the high on the 7th and ending with the low on the 8th. Once again, let's look at all the projection levels. And we can see 78.6 has been surpassed 100 as well. So that's fine. Let's not use that anymore. Okay, so let's just keep this 61.8% projection here, which is the highest point, I believe. Okay, this is the highest point here on 28th of October, right? So you can see here, this is a very strong move in dollar yen as well. And we can potentially expect to see a bearish break through the first resistance for the dollar yen if tonight's data um, function as a strong bullish catalyst for the dollar. All right, okay, with that, we've covered the dollar index, the euro, dollar yen. Let's move on over to the commodities and take a look at gold, right? And since the end of October, right, after making its intraday high on the 31st of October at 2,790, we can see that spot gold prices uh, has reversed very sharply, and it has lost almost as of today, right? It has lost nearly 9%, right? It has lost nearly 9%, losing about $250 per ounce, right? Since October. So in a period of about nearly 2 weeks, right, we've seen gold prices drop nearly 8.8%, losing $250 per ounce in the process, right? Very sharp reversal in spot gold, and it has also broken through a pretty decent pullback support, right? There's a pretty decent pullback support that took place here on 10th of October, right? And it got taken out very cleanly on Tuesday and then on Wednesday as well, right? Okay, it got taken out cleanly on Tuesday, right? As you can see, it closed underneath the support level. On Wednesday, it attempted to climb back up, but it then reversed swiftly to drop and extend the downtrend here. Right? So quite clearly, this previous support level can now be functioning as a resistance as well. We can identify $2,607 as a potential pullback resistance, and we can also run a Fibonacci retracement from this swing low on the 14th of February going up to the intraday high. When we look at all the fibs, we can see that this previous pullback support level was also accompanied by Fibonacci retracement at 23.6%, right? So we had not only the pullback support level, we also had a Fibonacci retracement with two elements identifying a potential support level, which got cleanly taken out uh, in, uh, in midweek. Now, 23.6% is no longer valid, so that's fine. What we can use is the 38 and 50%. When I look at around where the 38% level sits, there's a nice overlap level at $2,469.68. Right, we can identify this level as the first support because previously it functioned as a swing high resistance in mid-July, mini swing high resistance in August, resistance again in mid-August, and then proceeded to function as support on 22nd of August and the 5th of September, right? So this then creates a nice overlap level, which we can identify as the first support, and it's also accompanied by a Fibonacci retracement at 38.2%. Now looking slightly below, right, I see a pretty decent pullback level as well at around $2,360 per ounce, right? Pretty decent pullback level here, right? And this is also accompanied by 50% Fibonacci retracement. So for now, we can keep 38 and 50% in the analysis. And if you look a little bit below where $2,280 sits, we also see a nice little pullback here, right? We see gold bouncing off this level in the beginning of May, early June, and at the end of June as well. And this support level is also accompanied by Fibonacci retracement at 61.8%, right? You can also see another potential strong barrier here, right? But for now, let's just keep 38 and 50 in the analysis, and we can get rid of the other levels. And what this first support also tells us is, right, because we see gold prices falling sharply, right? The first support at the 38.2% retracement also helps us identify a potential take profit target for any short gold trades that you may have, right? So with gold prices falling very sharply, right, this is where it could finally stabilize for a while, and it is actually quite a good area to identify your take profit target for any short gold trades that you may have. So if we do see gold from peak to trough or peak to the first support, this would have theoretically is would have been will be nearly a 12% drop, right? With gold prices dropping about $325 per ounce, pretty huge move in a matter of about 2 to 3 weeks here, right? So take note that you can identify a pretty decent take profit target at around the first support, right? If you've been shorting gold since the beginning of this week, or perhaps even from a little bit earlier, right? Identifying your first take profit target at around $2,469 per ounce is a suitable area to do so. Now, we can also run the Fibonacci retracement from this low on 10th of October, going up to the intraday high. The purpose of this retracement is to find extension levels, right? So key extension levels sit at 127% and 161%, right? We can see at the present moment, gold is already breaking through the 127% extension level. This extension level is also associated with a small pullback, right? There's a mini pullback level that took place here on 19th of August, September, sorry, 19th of September, and it looks to have cleanly broken through this pullback support level and the 127% extension, right? So there's a somewhat of a bearish breakout below this pullback and the extension level at 127%. Right, and we can also see the 161.8% extension level, right, aligning very well with the overlap support at 2,469, which is also accompanied by Fibonacci retracement at 38.2%. So this brings us back to our confluence, right? Once again, we have identified the Fibonacci confluence and around the first support, and in this case, we have the 38.2% retracement and the 161.8% extension. So this highlights potentially a very strong support area, and that is why I said it is quite prudent to identify a take profit target at around this zone. So probably around $2,490 per ounce would be a suitable area to target for any short trades that you may have, especially if this current downward trend extends beyond the 127% extension. All right, so these are the key levels here for spot gold. Now let's move on over to commodities, to the other commodity, right, which is crude oil. And looking at WTI, you can see WTI has reversed off a pretty strong support zone, right? This is a multi-swing low, right? This is a multi-swing low that has been in place since 26th of September, right? We see the first swing low, of course, taking place at the end of September, the second swing low taking place here at the end of October, and we see as of yesterday and today price, the WT price for crude oil has stabilized around this level again, which is $67.73, and looks to be making a nice rebound here. Right, so first support is pretty clear for WTI oil, right? It is this multi-swing low support that's been in place since the end of September, and it looks like WT crude prices are making a nice bullish bounce here. So we might see a minor rebound of this level for today. Now, looking at the second support, right, there's a major swing low that has taken place here in mid-September. This is a very significant swing low, you can see here, right? And this is where we can identify the second support. Then we can use the bottom of this wick here to identify the second support, and that's at $65.50 per barrel. Right, and looking across at around $69.35, I see like an intermediate resistance barrier, right? This is a pretty, it's not, I think it might not be the strongest resistance barrier, but I see a pretty decent intermediate resistance. Why is that? Because I see a nice swing low taking place here in 18 October, on 18 October, and after the gap took place, it sort of ran into resistance here on 30th of October and 31st as well, right, before finally breaking higher. So it's not going to be the most strongest resistance, but is something to keep an eye on as well, right? And I believe there may be a Fibonacci retracement that's going to be associated with this level as well. But before that, the next major resistance for WTI oil is simply going to be this resistance here, right? There's a resistance here at the end in the third week of October, and a nice swing high resistance taking place in the second week of November, right? So basically, it's a nice swing high resistance at $72.33 per barrel, which we can identify as the first resistance here. So if we do see a clean break above this intermediate resistance at $69.36, we can probably expect crude prices to push higher. Now, as I mentioned, right, there may be a Fibonacci retracement that we can use. So to identify those retracements, we're going to start from this swing high on the 7th of November, going down to the low of yesterday. Let's look at all the retracement levels. And we can see that this intermediate resistance is also accompanied by the 38.2% retracement. And I see now, together with the 61.8%, another pretty decent intermediate resistance barrier here as well. There's another nice intermediate resistance overlap at $70.80. Right, so take note of these key levels as well, right? The 38.2% retracement and the 61.8%, because these are also highlighting intermediate resistance barriers. And if we do see crude prices break above the respective retracements, then rest we can probably expect it to reach up towards the first resistance here, which is at $72.33. Right, so these are the key levels here for WTI oil, and we're seeing a nice rebound today, right after consolidation on Wednesday, 13th of November, at the multi-swing low support at $67.33. We're seeing a pretty decent rebound in progress as we speak. All right, so these are the key levels for WTI oil. Okay, before we proceed, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll proceed with a few more analysis. And of course, should you have any requests, right, please do drop them in the chat box. I'll be more than happy to go through the analysis with you. Right, just keep the poll running for another 30 seconds or so. All right, sure. We can cover Bitcoin as well. Great. Let's cover Bitcoin first, and then we can take a look at the indices. Right. I think that's most of you who have voted. All right. Truly appreciate it. Right. We'll cover Bitcoin as well. All right. Okay. So, yep. Let's take a look at Bitcoin. There we go. All right. So you see here, of course, Bitcoin has made its latest intraday all-time high, right, at $93,483. So quickly looking at it in a monthly time frame, right, we can see that it has already, of course, broken above this major resistance that had been formed in March and April of 2024. This year, right, this was the previous major resistance barrier here for Bitcoin, and it finally got taken out very cleanly uh, following the outcome of the US presidential elections, right? Very clean break above here. As you can see here, very strong moves in Bitcoin. And since, let's just say, since September, right? Since beginning of September till now, it's already gained about 61%, right? And if you look at it from this trough here, since December of 2022, it has gained nearly 500%. So huge moves in Bitcoin, but also it comes with high volatility as well, right? But this is a very volatile uh, asset, right? So very volatile security. So take note of it as well. The gains are huge, but the fluctuations and the volatility is extremely high as well. All right, okay. Now let's look at coming back to this chart on a daily time frame, right? So very clearly, this is where currently the first resistance sits, right, at the intraday all-time high. And in terms of support, if we actually look at it, there's really no major support level apart from this previous resistance here. Remember, as I mentioned here, this was a major resistance barrier at $73,121. This can now potentially function as a pullback support. So the first support for Bitcoin is actually at 73,000, which is a huge uh, level away, right? If you look from the peak to here, this is about a 22% move as well. So basically, you're looking at like a bear market sort of move here. Should we see Bitcoin drop down to the first support again? But perhaps we can try and identify some intermediate support levels based on Fibonacci retracements, right? Perhaps we have to rely on something like that. Okay, let's look at it here. Let's try and start with a retracement from here, perhaps. Where would it capture? I think from here, 6th of September to the intraday all-time high. Let's look at all the fibs. Right, we have 23, 30, and 50. 50 aligns very well with the first support. So maybe we can keep all these three on and get rid of 78.6 for now. Right, 78.6 is no longer valid. It's not currently valid, not no longer valid, it's currently not valid. Right, and there's actually a nice overlap close to where the 61.8% retracement sits, and that is 66,025. So we can identify this as a second support and identify this as a pretty strong support zone here. Now, as I mentioned, right, in between the first support and the first resistance, this is a very huge gap. But basically, because we can't identify any support level based on a pullback or overlap, we're gonna have to rely on the Fibonacci retracements, and these retracements like this without any supporting arguments or without any other pullback or overlap generally may be weak support levels. So I'm going to identify them as intermediate support levels, right? Because they may not be the strongest level, right? The 23% and 38.2% retracements may not be the strongest support levels. Where I really do see a major support is at 73,121. It's the pullback support level that's accompanied by 50% retracement. Right, but take note this 23 or this 38 as well, they may function as potential support areas as well. Should we see Bitcoin pull back even further? But for now, yeah, probably, uh, well, I would not have very high conviction of that at the present moment, right? Until we see a reaction take place. Okay, so we've identified support and resistance levels. Now, beyond the intraday all-time high, how could we possibly identify the next resistance barrier? We might have to go down to the 4-hour time frame, and we might have to rely on a Fibonacci projection, right? We can start with a mini projection from here first. Start a mini projection from here, 12th of November, going up to the intraday high on the 13th and going with the low of yesterday, 13 as well. Okay, we have this. This is not, yeah, it's not so clean. It's too close. It's too small of a move. Perhaps where we can use a better projection would be starting from here, 4th of November, going up to this high on the 12th of November and ending here on this low as well on the 12th. And when we look at all the projection levels here, these are probably more useful levels that we can use. So coming back to the daily, we can now identify the second resistance at the 61.8% Fibonacci projection. And that's at 99,449. And of course, should Bitcoin continue to climb even higher, and if it continues to climb even higher, we can then use the next projection levels, which is at 78.6% and 100%. So what this also tells us is, right, should we see Bitcoin rebound higher, right? And especially if it manages to stay above the 23.6%, right? If it manages to stay above the 23.6% retracement, right? If we see a nice bounce off this level, what it tells us is also the first resistance can be used as a potential take profit target for any long Bitcoin trades. And should we see it break above the intraday high that was formed on Wednesday, 13th of November, we can then use the 61.8% projection as the next take profit target, and so on and so forth. Right. So these are the key levels here for Bitcoin as well. All right. Okay. With that, then let's move on over to DAX and US 500. We'll wrap things up with these two instruments. Right. Germany 30 is the instrument that tracks the DAX futures. And I see it has reacted very nicely off an overlap support. Right. I had identified this level as an overlap support uh, yesterday as well, well, earlier in the week, right? Earlier in the week, because we see a nice overlap here, right? There's a nice swing high resistance taking place on 2nd of September, resistance as well, 19th of September and 25th. Then this level proceeded to function as a nice support with this bounce here on 7th of October, and again as well here on 13th, right? In between, there were also decent bounces here, so this creates a very nice overlap level. This is a strong overlap support that we can identify as the first support here. Right, in terms of resistance, right, the first resistance can be identified at this pullback here. This is pullback resistance here that occurred last week. That's around 19,438. We can identify this as the first resistance. And the second resistance is simply going to be where the intraday high was formed, right? The intraday high for DAX was formed here on 17th of October. Right, so this is very clearly where the second resistance for this index sits at, and that's at 19,679. Right, so with this strong rebound in DAX today, right? So if you've gone long on DAX as of today, right, you can identify your first take profit target close to the first resistance here. So first resistance sits at 19,438. So identify your take profit target at around 19,400 would be a suitable area to do so. Perhaps this is an area where DAX could reach by the end of tomorrow, depending on how US markets open today. right? So we'll take a look at US 500 as well, because this is the instrument that tracks the S&P 500 futures. So we'll get an idea of how these two indices are trading, right? Okay, so we've identified second resistance, first resistance. We can also run a Fibonacci retracement from this swing low on 10th of September going up to the intraday high. And we can see that the 50% retracement sits pretty well with the first support. We can use 50 and 61. And we see the 50% retracement aligned very well with the overlap support at 18,983. And we also see a pretty decent pullback taking place here on Friday, 20th of September. And this level is also accompanied by a Fibonacci retracement at 61.8%. So you can identify this as the second support here. Right now, on this long uptrend, we can probably run one more retracement from this swing low, 5th of August, going up to the intraday high on the 17th of October. Looking at all the fibs, we can see, okay, 23% is no longer valid, but we can probably use 38.2%. Right, this helps us identify a pretty decent Fibonacci confluence zone identified by the 38.2% and 61.8% retracement levels here. All right, so these are the key levels for the DAX, right? The Germany 40 is an instrument that tracks the DAX futures. Right, and let's wrap things up with the US 500. Right, we can see after making this intraday high on Monday, 11th of November, right, the intraday high for US 500 was at 6,036.16. Remember, this is the instrument that tracks the S&P 500 futures. And since making that high earlier this week, or the beginning of the week, it has sort of consolidated around this at around 6,000, right? So it's consolidating around 6,000. So very clearly the first resistance is here. And first support is simply going to be the previous resistance barrier here. We can see a very significant resistance at 5,870 that had been in place from 14th of October till 30th of October before finally breaking out. So this level can now potentially function as a pullback support, and we can identify it as the first support here. We can also run a Fibonacci retracement from this swing low, 4th of November, going up to the intraday high. When we look at the 50% retracement level, we can see that it sits pretty well with the pullback level at 5,872. Now, we can also run another Fibonacci retracement starting from this swing low on the 6th of September, going up to this swing high on the 11th of November. We can see that the 23 and 50% retracements align very well, right? 23 and 50 form a Fibonacci confluence at the first support. And when you look at the 50% retracement, you see a very nice support level as well at 5,692. We can identify this as the second support here. And finally, we can probably run one more Fibonacci retracement from this swing low on 5th of August, going up to the intraday high. We may have the 38.2%. Okay, probably we can use it as well because it identifies this overlap level here. Right now, you have an overlap level identified by the 38.2% and 50% retracement levels. We have another Fibonacci confluence here identifying a very strong support zone. Now, what about resistance beyond the intraday high? Right, beyond this intraday high, the next resistance can be identified by a Fibonacci projection. Right, so we're going to start this projection from here. This swing low on 6th of September, going up to the high. Where is the highest point? 637.3. It is, yeah, it is this one. Yeah, it is this here, this date, 17th of October, going down to the low on the 4th of November. We can see the 61.8% projection sits pretty close to where US 500 stalled earlier this week, right? It's very close to where the intraday high was formed, and you can see that since then it is consolidated around the 61.8% projection level. So that means we can use the 78.6% projection level as the second resistance. That sits at 6,086.40. And of course, should we see US 500 continue to climb higher, we can then use the 100% projection at 6,193 as the next resistance barrier. So what this resistance barriers also tell us is that if we see a bullish break above the first resistance at 6,005, we can then target the second resistance at the 78.6% Fibonacci projection as a potential take profit target, right? So we see a bullish break take place, we can then use the 78.6% projection as a take profit target. And on the flip side, if we do see US 500 pull back even further, if it falls down towards the first support and stabilizes around here, It helped us identify a potential buy entry as well to play a potential bullish bounce. And if that bullish bounce materializes, we can then target the first resistance once more, which as a potential take profit target. All right. Okay, that's all I've got for all of you today, right? Thanks everyone for tuning in to today's session. And also do take note of the data that's coming up later today and tomorrow, right? We've got US PPI and unemployment claims both being released at the same time at 1:30 p.m. GMT. PPI looks set to accelerate further, and an acceleration in PPI is likely to function as a bullish catalyst for the dollar. And at the same time, we're expected to see unemployment claims remain relatively unchanged from the previous week's reading, and a lower set of figures is also going to function as a potential bullish catalyst. So we may have a scenario where we have a double bullish catalyst for the dollar later today, right? And also later on, much later on at 7 p.m., 8 p.m., and 9 p.m., we've got the respective central bank chiefs speaking at their respective events. And then tomorrow we have industrial production data and retail sales out of China. That's at 2 a.m. GMT time. Take note if we do see a stronger set of results, right? Higher production figures and higher sales. This could, especially for industrial production, right? This could potentially function as a near-term bullish catalyst for crude oil prices. So take note if we do see industrial production improving once more, on an annualized basis, we see it accelerating once more. This is quite likely going to function as a near-term bullish catalyst for crude prices. And then, of course, at 7 a.m. GMT, we have GDP data out of the UK. And finally, we have retail sales out of the US at 1:30 p.m. GMT. Right, that's all I've got for you, all of you today. Right, thanks everyone for tuning in. I wish you all the best in your trading journey. And as we come to the end of the trading week as well, I wish you all the best over the weekend. Right, remember to spend time with family and friends and unwind as well. All right, take care. Have a great trading week, and catch you all at the next webinar.